The Texas housing market is cooling, but not in the way the media is making you think. And that misunderstanding could cost you big, because right now buyers are either overpaying out of fear or they're sitting on the sidelines while one of the best buying windows in years is starting to open. And in this video, I'm going to show you how to actually read what's happening in the Texas housing market so you can time your next move strategically instead of emotionally. Let's dive in. So Texas is still one of the strongest growth markets in the entire country. Population growth, job growth, business migration is all driving our long-term demand forward. But right now, rates are elevated. Demand has softened, inventory is rising, and that creates something really rare, and that's buyer leverage, something we haven't seen for a long time. But here's the issue. People see high rates and they think, you know what, I'm going to go ahead and I'll wait a little bit for rates to contract. But price and competition, they don't always move in sync with rates. And misunderstanding that is where people start to lose money. If you look at any of the markets we work in, like Austin, Dallas, Houston, the prices, they're not crashing like a lot of speculators want you to believe. They're stabilizing after a really long run up and then a really dramatic pullback. And historically, this phase is where the best opportunities will show up. Not because prices are the lowest, but because terms become reasonable and become negotiable, and sellers are actually more in line now with reality in terms of what the new fair market values actually are. So what does a cooling housing market actually mean? Cooling doesn't mean cheap. It means that there's less competition, there's more days on market, more inventory, and there are more concessions to be had from sellers. So here's where most people get this wrong. They focus only on price and not how they're actually structuring their deals. And here's the part that nobody really explains properly. When you look at Zillow or MLS, or you see a home that's listed for $325,000, you assume that's what they are selling for. And the fact is they're not. What you're actually seeing across all of Zillow or Redfin, whatever you're looking at, all of those prices that you see on active listings, that is a pool of failed pricing. Active listings, expired listings, withdrawn listings, canceled listings. That's the market rejecting those housing numbers, those sale value numbers that somebody tried to sell something. The real signal is what has actually closed. Those assets are pulled from the market and actually transact. At the peak in late 2023, 2024, the peak of the market, that gap between what properties were listed for and what they're actually selling for, that was closer to like 15 to 20% depending on the specific area. And today that gap is way tighter. That's down to like maybe 3 to 5% delta between what assets are listed for and then what they're actually closing at. And that shift is where opportunity is really starting to pile up. We're now in a market where sellers aren't wildly unrealistic, but they're still slightly above where true fair market value is. And that creates a little bit of leverage. You don't need a 20% discount on sale value. You just need to be closer to reality than the seller. If a home is listed for $325,000, for example, offering $310,000, even $305,000, that's no longer seen as aggressive. That's aligned with true and accurate fair market values. And those offers are starting to get accepted time and time again. Most people try to time the bottom of the market, but real estate rewards positioning in the market and not perfection in the market. If rates drop, prices and competition, they will likely rise, supply and demand. So waiting can actually cost you a lot more in the long run. So this is how a sophisticated buyer might approach this. They're not just chasing deals, any deals. They're targeting pricing inefficiencies. An inefficient market is where opportunity lies. So right now what we're seeing is seller concessions, builder incentives, flexible financing terms, and here's the key. You can refinance any rate that you like, but you can't renegotiate an ultimate purchase price. And this is why inventory is your advantage right now. We're also seeing it in behavior. Sophisticated buyers have started deploying capital again. That started maybe 6 to 12 months ago, but now these institutional funds are starting to accelerate and deploy more and more. And that's a greater subjective measure as to us actually getting to the bottom of what true and accurate fair market value is going to look like moving forward. So here's how to think about this. Stable income, reserves, long-term flexibility. So the question you should be asking is not just should I buy now, but where is the best opportunity to purchase right now? For most serious buyers, waiting right now is actually riskier than buying, not because prices are going to spike tomorrow, but because you're giving up this really unique time in the market where the buyer actually has sufficient leverage, and that leverage is aligned with where a seller is actually willing to transact and execute a transaction. So I'm curious if you agree, if you disagree, go ahead, drop it in the comments. And this isn't about rushing into a deal. It's about understanding the market well enough, act when when numbers actually make sense, because small decisions, timing, negotiation structure, all of that can mean the difference of tens of thousands of dollars over time. So if you're serious about buying or investing in Texas and you need clarity for jumping in and pulling the trigger, or if you want help analyzing any kind of deals, feel free to reach out. You can reach out directly via our website at victorsteffen.com. Feel free to schedule a call, and I cannot wait to work with you.